You're sitting there. Well, good morning. Good morning. Sorry, is this working?
There it goes.
Sorry for the slight delay, but welcome to the income tax subcommittee of the Ways and Means Committee. If you join me in just a moment of prayer, since it's the first meeting in the morning for most of us. Heavenly Father, that we just pray that you bless this day before us, bless our families, bless the work we're trying to do, and all these things. We're going to give you all the praise, honor, and glory in Jesus' name. Amen. Thank you. Our first bill today is going to be House Bill 284 by Representative Camp. Representative Camp, or Chairman Camp, if you'd like to present the bill.
Thank you, Mr. Chairman. It's just all right, I'm going to come here and Joel from Samaritan's going to join me. All right, so House Bill 284 LC 52236 is a measure that makes it possible for individuals who are enrolled or who are members of healthcare sharing ministries to be able to deduct on their state income taxes what they pay in monthly for their share. It does not change anything as far as the standard of care, and that seems to be something everyone has mentioned to me. So I'm going to let Joel kind of take that away, if it's all right.
That's right. That's fine. First of all, I just want to remind everyone this is first hearing in this bill. It's going to be hearing only today, as we do on all of our subcommittee bills on the first hearing. If you just give us your name and who you represent.
Absolutely. My name's Joel Noble, and I'm from Peoria, Illinois, and I'm here representing Samaritan Ministries International. Samaritan's also a founding member of the Alliance of Healthcare Sharing Ministries, and we're one of the largest sharing ministries in the nation among the 1.5 million folks that are using healthcare sharing ministries nationwide. So for over 27 years, Samaritan has been serving its members as we bear one another's burdens through healthcare sharing, and that includes over 8,000 Georgians. And within that, roughly 1,800 of those folks are represented by somebody on this committee. And then there's nearly 60,000 more members in other ministries throughout Georgia. And so members of healthcare sharing ministries financially assist fellow members with medical expenses, and that renders a result usually provided by health insurance. So this non-insurance approach is administered by a not-for-profit acting as a clearinghouse for those who have medical expenses and those who desire to share the burden of those medical expenses. With healthcare sharing ministries, those that are sharing are called members, and the money sent by members to other members to pay for medical expenses is called a share. And so what this bill would do is it would allow a tax deduction, because currently these shares are not considered by the IRS to be deductible like medical insurance. And additionally, self-employed members of a healthcare sharing ministry are not currently able to avail themselves of self-employed health insurance deduction on their federal 1040. And so I would just like to thank Representative Camp for hard work on this and our willingness to help the members of healthcare sharing ministries. Nearly half of our members are below 200% of the poverty line, and they choose to forego Medicaid to be part of these ministries, and many of them live in rural areas where healthcare options are limited. So I'm trusting that this budget impact will be modest, but the message it sends to tens of thousands of Georgians would be huge. So when the time comes, I know this is first hearing, I would just ask that you do vote to move this bill out when the time comes. Thank you very much. And I'd be more than happy to answer questions.
We have questions from members of the committee. Sure.
And I don't know if it's directed at you or someone else, but is this tax deduction going to be like the same one for a charitable donation, or similar to the deduction that other people have for their health insurance?
It would be
expenses
on our deduction form on our Schedule 1. It would, right now, I believe we've got 23 deductions. This would be a 24th deduction, and it would simply state for this sharing, and it would have a shared amount. I think it was, someone gave me the estimate, it'd be about $258 a year for a family filing their taxes. And while that might not seem like a lot of money, if you look and you realize that half the members are below 200% of the federal poverty line, that's $20 a month. That's half a tank of gas.
Thank you. Just curious.
Chairman Stevens.
So you're looking for parity basically with the other insurance companies to add a deduction on here that they already get on a state form.
So, I mean, it wouldn't be with other insurance because we're not insurance, just to be clear. But as Representative Camp mentioned, there's about 23 deductions on this Schedule 1, and currently one of those I know is a high deductible health plan. And so that's something that's already available. We serve a similar purpose, but actually I would say a little bit better because high deductibles, as the name indicates, a high deductible. And so this would allow folks to be able to deduct their shares. They also don't have the advantage of an HSA either. So folks with a high deductible health plan most likely have a high deductible health plan because they're carrying an HSA. So those dollars are sheltered in the HSA also. So in a way they're getting double savings they're getting it on their state income tax with a high deductible, and they're sheltering that money in their federal income in an HSA. So we're just asking for similar type of deduction that's already on the Schedule 1 for like high deductible health plans. Correct.
Chairman Carson.
Thank you, Beth, for bringing this bill. Representative Camp, I just wanted to ask you or whoever, there's a number of areas, two questions. One, there's a number of areas where the word participants is struck out and the word members is inserted. Can you tell me why that changed and what is the difference between, in these healthcare sharing ministries, what is the difference between a participant and a member?
There's not. Participant's just a kind of antiquated word. I believe in 2011, when Georgia first passed what's called a safe harbor, clarifying that these ministries are not insurance. So for the last 12 years, Georgia has recognized these are not insurance within your insurance code, and they used the word participant back in 2011. So the first part of this bill is just a slight update to that safe harbor in 33-1-20, and part of that update is just calling them members, which is a better word to describe than participants.
So 33. So this is in the insurance code, but it's not technically insurance.
Correct. Yeah. So actually what 33-1-20 says is that these ministries are not subject to the insurance code. And
Okay.
31 states already say that.
Sure. The only thing I was going to, other item, if I may, Mr. Chair.
Yes, please.
Just this is on a technical matter, and I'm more of a tax guy, as you know, Beth, as opposed to auditing. But if we proceed forward, I was just going to mention on lines 46 and 47 where it says, is performed by an independent CPA in accordance with generally accepted accounting principles. We had an issue. The reason I drilled down on this because we had an issue on a healthcare bill that came out of Chair Lady Cooper's committee in regard to retirement homes or in senior living, and they had to provide a financial stability test. So I would want you to probably work with the Society of CPAs in regard to whether or not that should be generally accepted auditing standards. Typically, if you have say Coca-Cola's head earnings statement, that's done and performed and prepared in accordance to accounting principles, GAAP. But if you're talking about this in regard to how to prepare this audit for these entities that you're identifying in 46 and 47 and 48, that's generally accepted auditing standards. So I don't want you have to come back with a cleanup bill. So if you don't mind.
Yeah, and that's certainly why we're here. Thankful for a first hearing. So, words do matter, quite obviously, and so that certainly can happen in a sub.
Well, we had an issue with Chair Lady Cooper's bill, whereas for 3 years, CPAs would not sign off on a financial stability, and so they were just kind of stuck with DCA. So I don't want you to be in that position. That's all, Mr. Chair.
I'll clarify that language is taking directly from the Affordable Care Act. That's a requirement on the federal level. That's why it's in there. That's the language that the federal government used as a requirement for us on the federal level for any of them that were certified by So that's the only reason that language was used that way.
Okay.
The federal government requires that.
Okay, I have just a quick question. Structurally, walk me through it just very briefly. You say, is there a monthly deposit being made by these members? Is there a monthly? Tell me how the math works. Just give a hypothetical, because part of me heard you say that there's a monthly fee, but then there's then members are directed to send their checks directly to other members. So walk us through very briefly the mechanics of that,
Yeah.
please.
So the best example is myself. I can tell you exactly how the sharing works. So each month I get a slip in the mail or in my email, and for me and my family of 6, it's $368. And so I know that I'm going to write a check, or I'm going to go on PayPal or Venmo or somewhere else, and I'm going to send it to another member that had a medical need. So that slip tells me that Bob Smith broke his leg, and please pray for his healing. Here's his address, and so I'll send him a card, usually telling me I'm praying for him, and then I'll send that check directly to him. When I've had medical needs, when my 4 kids were born, we've had other needs, I've received checks in the mail. With all my maternity needs, I went to the hospital ahead of time, and they had what's called a stork broker plan. It was a prepay maternity plan, and so I prepaid that, and then I used those shares to basically reimburse myself, and that's how it works. So when we talk about the deductions, so that $368 that I send a month, if I was a Georgia resident, that's what I would be deducting, that $368 times 12. And then the only other thing is that with us, the way the admin works is the 12th month out of the year you send to the office, and that's how we operate administratively. So it's 11 and 1. So a member on their anniversary, so mine would be in August, would send to the office, and that's our operating costs.
Okay, and I understand there's a fiscal. I'm sorry, Chairman Dickey's got a question.
Thank you, Mr. Chairman. I was just really following up with your question too. So you send a check directly to a member. So we're asking for your payment to be tax deductible going straight to a member. So who routes how many checks? How many members send checks to other members? I mean, what prevents you from getting a huge amount or not enough?
Yeah. So if I had a need for, that birth that we had was, the first one was 3,800. And so I turn that in, and what happens is, so I'm a family of 6. There's a lower share if you're just a couple, lower share for a single. And so our software each month goes through and allocates enough of those single shares, and then it goes through and would allocate couples and families. And what it does is it allocates enough to take care of that, and then it moves on to the next person and moves on to the next person. So it signs enough within $25 to $30, over underage. And then the person on the receiving end has a slip, and it tells everyone that's going to be sending to them. And they check that off, and then they return it the next month to us. And then if someone didn't send, we remind them, and that person on the other end will say, oh yeah, sorry, forgot, I'll send that. Or they might say, I got a new job, I have insurance now, I meant to tell you I'm dropping, and then we reassign that to somebody else so that the person on the receiving end doesn't end up short on their medical expenses.
Do they get an explanation of benefits form? Does the person who has the medical need, do they get any kind of explanation from your office that, hey, listen, you're responsible for this amount, i.e. a deductible and then a cost sharing like a co-insurance?
So we do have guidelines that explain what's shareable and not shareable, and most things that insurance would cover, we're also sharing. There's some exceptions. But we have 2 different programs. We have what's called Basic, that's what I'm in, and we have Classic. And really the only difference is what we call initial unshareable. So in the insurance world, that would be called a deductible. So I know I'm responsible for the first $1,500 of a need. And then in Classic, it's $400. And I'm also responsible for 10%
Okay.
also. So
Well, that answers
Yes.
my question. Thank you. I'm sorry. Who we got? Representative. I'm sorry. Representative Fry.
Thank you, Mr. Chair. I appreciate this legislation. I think it's a great idea. Just curious as to what are the reserves that y'all hold? Is there a reserve limit? How financially sound is the whole thing in case like a bunch of members decide not to drop out of the system and they're not making their payments? How do y'all cover that?
Yeah. So we're not insurance, so we don't carry reserves. This is strictly a charity, member to member. And actually, those states that I mentioned with a safe harbor, including Georgia, there's a disclaimer that's required by the state saying that we're not insurance. There's no guarantee of payment. Ultimately, the members are responsible for their own medical needs. And so the members know that on the front end. Last time I looked, between website and everything else, there was probably 83 different times that we say that we're not insurance and there's no guarantee, and that members are ultimately responsible for their own needs. And that's a disclaimer that Georgia requires, and they've required it ever since they passed the safe harbor in 2011, and a number of other states, at least 31, if not more, require that kind of disclaimer that we're not insurance.
Okay. Chairman Stevens.
How do you handle fraudulent claims?
So a few different ways. So we actually receive the medical bills that members have. So those maternity needs I'm talking about, I sent in the actual bills. So we're seeing actual bills, so we know that a need had actually occurred, unlike insurance where we're dealing with after the fact that needs that have already happened. Additionally, we work with providers on trying to get a fair price. Because we're not insurance, often our members will get charged charge master. Sometimes I've personally got a bill that was 2,000% higher than what an insurance company would have paid. And so when we're working with these providers to get a fair price, we often know, we'll know for sure because they'll say, I don't know what you're talking about. We never saw this person, or we've already discounted this 50%. This is the actual price. So there's follow-up with the providers, but the main way is that we actually are getting original itemized medical bills, so we know exactly what the needs are that are being submitted.
So you get an authorization from the member to be able to discuss the financial details of the services provided with the provider.
Exactly, yes.
Any other questions for the presenters? Well, this was a hearing only. I understand a fiscal note has been ordered, so we'll wait. As soon as the fiscal note comes in, I'm sure you'll be made aware, Representative Chairman Camp, and it's good testimony. Appreciate the presentation.
Thank you.
Next, we're going to move on to House Bill 413. Chairman Williams will be presenting this measure.
Thank you, Mr. Chairman. Is it on? Thank you, Mr. Chairman. House Bill 413 is known as the Garja bill. We have gone through this bill several years, and it's passed out of the House. It's the LC number is 432635. Okay. The Georgia Agribusiness and Rural Jobs Act creates a fund enabling the state to partner with participating federally licensed small business investment companies or rural business investment companies to establish a total fund of $100 million. There are safeguards. Each fund must commit to creating and retaining specific number of jobs which drive new revenue to the state. If a fund fails to meet its job numbers, fund managers are liable for significant financial penalties based on actual payroll numbers. Business owners will tell you working capital is the lifeblood of any company that hopes to grow and thrive. This money will be used for strategic investments like technology upgrades, new machinery, and hiring and training of new employees. Garja is a winner for the state of Georgia. Every job created or retained through Garja generates $13,400 in revenue for the state. The Georgia Agribusiness and Rural Jobs Act is a vital lifeline for rural communities and small businesses across Georgia. At this time, Mr. Chairman, I had some folks that wanted to testify. if they would like to come speak to the committee. Please introduce who you are and who you're with.
Taking some time to listen to us, the boots on the ground, if you will. My name is Stephen Dyer. I'm the president and CEO of Thompson Plastics in McDuffie County, Georgia. I'm really here this morning on behalf of 229 families in McDuffie County that would have been facing a much darker and bleaker future had we not had access to the GARJA funds. If I can take you back to early 21, we were still in the throes of the effects of COVID, experiencing 20, 30, 40% absenteeism on some days at our facilities. Our customers' schedules were sporadic because they were experiencing global supply chain issues. Days were dark in our business. We had been the recipients of PPP loans and had been able to keep people employed and coming to work as they could on a daily basis. But our business was really struggling. One of the benefits that inadvertently came from COVID, though, was a global consensus that we needed to shorten the supply chain. And so suddenly we were presented with opportunities of nearshoring and reshoring opportunities for supporting manufacturing companies here in the state of Georgia. But we didn't have any means to get the capital needed to buy the equipment to secure those new contracts. Advantage Capital, Tim Peruzic and his great team, other programs, other private partnerships that you support, and Augusta Technical College and others in the area partnered with us. We ordered new equipment. We were able to secure the financing to buy the equipment to handle the new contracts. And going on 2 years now, we're looking at a much different future. So instead of losing those 220 jobs, and we were quite honestly on the precipice because a traditional bank, because of the post-2008 regulation, simply couldn't sit down and have a conversation with us. We talked to them, and they knew the need, and they could see the value that could be created. The truth was we weren't going to survive until we were in a position that they could help us. And had it not been for the GARJA funds, we would have not made it. So thank you for your support of this legislation. I can tell you on behalf of those 229 families in McDuffie County that don't have all the options that many of us in this room have, they appreciate that opportunity, and they thank you for it. And we're going to continue to use this money to create another 200 jobs in McDuffie County in the next 5 years. And I'm happy to answer any questions.
Do we have any questions from members of the committee? Okay. Chairman Carpenter.
Thank you, Chairman. What's the interest rate on the loan that you received on the equipment?
I'd have to check the loan documents. It's slightly higher than traditional, but
Sure.
much better than we actually deserve. I think we pay around a 4% PIK and an 8% annualized interest rate.
Okay.
Which would be competitive in the market.
Yeah.
Chairman Martin.
For the capital infusion, I guess that you're talking about, how much capital infusion was it for the 229 jobs?
We're actually approaching and close to our second tranche, but in total it would be about $3.86 million, and that was used to secure financing and the down payments on. We bought 3 new large tonnage molding machines last year, and we've ordered 3 new this year. The total investment there is just under $10 million.
And you may not know, this may be a question to the author. Of that 3.8 million, how much of that was state dollars that wouldn't come back?
Tony Tubes, Advantage Capital. So to be clear, 1.6 was the first tranche. That's the GARJA investment.
Okay.
So 60% of that would be the state contribution.
It's about 800,000.
Okay.
Yeah. The rest of it is coming out of federal new markets, a different source unrelated to state incentives.
Okay. So, but how much taxpayer money is in the 3.8?
What Chairman Williams just said.
1.6?
Of
No.
the 1.6, he said 60%.
1.6
No, that's
is
state dollars. You said the new market. You're referring to.
That's federal.
I
That's
understand. How
that's
much,
federal.
That's taxpayers' dollars too.
40% federal.
So the whole 1.8 is tax dollars going into this, and then you add
The capital on top of that.
The delta in that too.
Correct.
And then, but you get paid back the 3.8.
Correct.
Okay.
Yeah, but the state taxpayer contribution is the 60% of the Garza first tranche. No, it's a tax credit.
Any more questions from members of the committee? Who else spoken? Is anyone else in the audience here signed up to speak to the bill? Okay. If you would have a seat and tell us who you are and who you're with.
Thank you to the chairman and committee for allowing me to speak here in support of the Garza Act. My name is Matt Calamari. I'm a managing director with Impact Housing. Impact Housing's corporate office is based here in Atlanta. We are a premier manufacturer of modular structures across asset classes, single-family housing, duplex, townhome, etc. We are operating out of a formerly vacant manufacturing facility located in rural Georgia in Appling County. 3 years ago now, we were rewarded $1.5 million through the Guardian program. In contrast to the gentleman who just spoke, our capital was used for startup. We had initiated the business and had begun operations, but were able to obtain that capital for growth. Since that funding, we've gone from an employee count of 10 to 100 to 115, depending on the month, across management, supervisory, general, hourly labor. We've instituted a minimum hourly wage of $15 an hour with a plant-wide average. It's very few stay at that level that is north of 20. The local market average is well below that at this time. We've been able to close north of 20 million of business in the last 18 months, and our future is bright. So we've produced 175 homes. Our focus is all on affordable housing as well. So not only are we providing jobs, we're providing housing to the Georgia market, Florida market, and everywhere else in the Southeast that we can ship to. Additionally, separate from the Garza funds, we were able to acquire the manufacturing facility, which further improves our staying power in that market. And so we thank you for these funds, and I'm encourage the committee to assist other businesses like mine in providing rural jobs throughout Georgia. Thank you.
Representative Fry.
Thank you, Mr. Chair. I appreciate what you said about the wage that you provide. I think that's a very important thing that we should consider as a committee, that as businesses take advantage of our state tax dollars, that they are also providing living wages to the employees that work for those businesses that receive those state tax dollars, because investing in our citizens is going to be the way that we can create a stronger state. So thank you for that.
Thank you.
Does anyone else has questions for the gentleman? If not, we have one more person signed up to speak to the, do we have two more people? I'm sorry.
Thank you.
John Danger and Dante Handel, are y'all together? Oh, okay. I'm sorry. Okay.
Thank you, Mr. Chairman. Is this on? You can't tell. It's on. Okay. Thank you, Mr. Chairman and members of the committee. I wish mine was more interesting because I'm not one of the companies. I'm actually one of the investors. But my story is somewhat compelling because we were able to put out $21.5 million.
Tell us who you are first.
Oh, I'm sorry. John Danger with Stonehenge Capital.
Jeremy Collins representing Stonehenge Capital.
Yeah, Stonehenge is a national leader in specialty finance community development. Since our founding in '99, we've managed over $2 billion in economic development investment funds focused on financing small businesses located in underserved markets. In Georgia alone, Stonehenge Capital invested over $21.5 million through the Garza program. Our team has also driven an additional $16 million to Georgia and low-income communities as a certified allocatee under the Federal New Markets Tax Credit Program. As I stated, we're one of the five companies participating in the Garza program. Since the enactment in June of 18, our team has invested 100% of our investment authority into 6 eligible small businesses across the rural state. Our investments have created and retained over 229 family-sustaining jobs in the ag industry, healthcare sector, and manufacturing sector, and more. Many of our employees previously commuted over 80 miles to maintain gainful employment. The jobs created through the GARJA program have allowed such individuals to work within their own rural communities now. Moreover, we have seen the GARJA program revitalized overlooked areas, which is a story that I think we've already heard a little bit of. For example, our investment in Stonehenge Capital that we provided into Doorcraft Products allowed the business to refurbish the Horton Homes plant based in Eatonton, Georgia. And they've grown to over 100 employees there from a base of 20. This would have not have been possible without the investment of the small business investments received from the GARJA program. Rural Georgia makes up a significant portion of the state and the economy, but has faced critical underinvestment. Accordingly, I'm urging you to renew the GARJA program by passing the House Bill 413. It's uniquely positioned to provide long-term patient growth capital to some of the hardest to reach areas in the state. We're hoping that these rural communities cannot be left behind anymore. So,
Thank you, Mr. Chairman. We're happy to take questions, or we're happy to reserve the time that you guys need.
We are kind of bumping on some. We're at 8:34 right now. Does any of the members have any questions?
I'd like to
sure.
But I'll do it after the meeting.
Well, this isn't a posture to right. This is the second hearing of this bill. So if you got a question, now's the time to answer it. Ask it.
If I understand the program, the state puts money in, you bring money to the table, and then the firm, puts it to work on the ground, but you get paid all the money back.
That's correct.
So, what's your ROI on that investment?
Well,
right offhand, you double your money if you get it back, because we're putting in 60% and you're putting in 40.
We're putting
the federal government's putting in 40 and you're putting in the other half.
That's right. We're putting in the 60%.
So right offhand, you're getting a 100% return in how long?
Our notes are typically a 5-year investment horizon.
I just suggest, I don't know that we can do it today, Mr. Chairman, but I just suggest today that it would be better for the state to get in that through DCA and do the grants, have the money come back to the state and roll it into the next GARJA program so that we could do even more with that. But
well,
and get with gentlemen, get with firms like this that can help us administrate. But that's for a different day.
Well, this is second hearing, and it will be the will of the committee whether or not it moves or not today. But do you have a follow up to Chairman Martin's?
Yeah, real
remarks?
quick. The big picture is the funds like Mr. Dangers and myself, Advantage Capital, when we come in and do a business plan submission to DCA at the beginning of the program, part of that business plan has a specific job number of created and retained jobs over the life of the tax credit compliance period. That number drives a general fund return in excess of the cost of the tax credits over the 8-year tax credit compliance period. So if we as the fund managers do not hit those job creation and retention commitments, we owe a financial penalty back to the state that essentially would make the state whole on the cost of the credits. So the thesis is, because of these businesses creating and retaining jobs, they're growing the Georgia economy. Money comes into the Department of Revenue to the general fund because of that, and Georgia Tech has done at least 3 studies along the way documenting the progress and showing the impact on the Georgia economy. So the state does get its money back through general fund revenue growth.
If I can just apply that, the state auditor's done a fairly significant report on it as well.
And Dr. Alfie Meek of Georgia Tech did an answer to that audit. He found that it had significant structural flaws and factual mistakes in it, and we had talked about that last session. Happy to renew that. I think saw Chairman Williams had a copy of it. I think the committee members have copies of it. Happy to go into that, but the way the program is structured is it's a vehicle for rural Georgia to grow the Georgia economy as a whole.
Are there any further questions of the presenters? I'm sorry, got one more gentleman. We really are bumping into some time issues now, but if you could identify yourself and.
Good morning. Well, thank you for giving us the opportunity to, again, reiterate how important the GARJA program has been for us in our case. I'm Maurizio Giabbai. I'm the Chief Financial Officer for Cornucopia Farms, Inc.
Yeah, I can't hear you. Speaking
Sorry.
to the microphone.
Okay. Our company has a hydroponic greenhouse operation in Jefferson County. We started the operations in 2020. Thanks for the GARJA program, we were the recipient of the first funding in order to complement it with private funding. We were able, with the loans that were provided through the GARJA program, to secure funding from private investors in order to be able to start the operations. With that, we were able to start the business in 2021 and 2022. We have been operating, and actually we are replacing produce that is typically imported from states far away like California, Arizona, and also other countries like Mexico and Canada. So we are gradually increasing our operations. We are looking for additional funding to add more facilities to our operations. And we hope that with the GARJA program we are able to sustain that.
Well, thank you. Could you share with the members how many employees you have?
Yeah, we have right now about 10 employees. With the growth of the business in that particular site where we are located, we have a 40-acre property. We are planning to increase to 15 acres on the roof with greenhouses, which will employ roughly 60 employees.
Do we have any more questions from members of the committee? Yes, ma'am.
How much money did you get from Garvey the bonds?
We had a first stage of 345,000, and a second stage of another 125,000.
And you have 10 jobs.
We had 10 jobs.
All right. Representative Fry.
Thank you, Mr. Chair. I think this is totally rural area based, where you're able to acquire property, like the previous speaker said, that you're able to set a footprint in the area that you're operating. You're bringing benefits to the area, and I think that the number of jobs or the number of return to the state is an immeasurable a number that you guys do in these rural areas. I mean, when you base in the rural areas, you're really making an impact rather than nothing being there at all. So
absolutely,
I appreciate what you're doing.
All right. So this is the second hearing. We're bumping into time. So what's the will of the committee? Got a motion to pass. Is there a second? Second. There is a second. Any discussion? Hearing none. All in favor signify by saying aye.
Aye.
Opposed, same sign. Got one no, two noes. The motion passes. Congratulations to the author. Next to, I've got a quick measure that Vice Chairman would come over, Washburn would come over and sit down. I've got a quick measure that Chairman Blackman put on. I'll just slide over here. The chairman tells me.
Thank you, Mr. Chairman. You may present your bill.
All right. I need to find it.
Bill 412.
Here we go. I got it right here. All right. Members of the committee, I bring before you House Bill 412 LC 432632. Quite simply, if most of you remember House Bill 149, a bill we passed 2 years ago that it allows essentially for any kind of the majority of pass-through entities in Georgia, and think S corporations, multi-member LLCs, basically any kind of entity that the owners of are getting a K-1 where they pay their federal and state income tax liabilities on their personal income tax returns. It's been enormously successful. There was some pass-through entities that, through some technical reasons, did not qualify to be an S corp because of the ownership structure, and this bill simply allows a broadening of the shareholders that can participate in an S corp in order to take advantage of this ability to pay state income taxes at the entity level, which thereby lowers their federal tax responsibilities, and actually, so it's a tax savings for these Georgia businesses, most of whom and most of our businesses in Georgia, small businesses in particular, are organized as LLCs and S corps and such. So there's zero financial impact to the state of Georgia. This methodology has been, we have a letter from the IRS that was applicable 2 years ago that basically said this methodology is okay. They'd have no problem with it. And it's really a workaround the state and local tax cap on personal income tax returns. But I'll be happy to answer. This is the second hearing. It's been very, very successful. I'll be happy to answer any questions from members of the committee.
Are there any questions? Number 5.
5?
Oh, I'm sorry, 7.
Thank you, Mr. Chairman and Caucus Chairman Williamson. I just want to say, I've seen this directly in practice with a number of CPA firms where their clients want to take advantage of House Bill 149 benefits at the federal level, but have not been able to because their particular structures and entities have been precluded by this language right here. So I just want to thank you for bringing this forward. I know this sounds kind of indirect and it's hard to conceptualize, but this is a very big deal to a number of taxpayers across Georgia. And I'm happy to make a motion at the appropriate time. It's that big of a deal.
Okay, we do not, I don't see any other questions. We don't have anybody speaking on the bill, so the chair will entertain a motion.
Move to pass, Mr. Chairman.
And before you call the vote, I'd like to propose a one-sentence addition to this language as a committee substitute, if I may. And what we do is insert between, at the end of line 38 and move the lines forward, section 5.1, just for the clarifying language it says, bear with me, the clarifying language that says the election under this subsection shall have no impact on the accounting or tax treatment of distributions for an electing pass-through entity. I did run this one sentence as a clarity measure by the Department of Revenue, and the department said they didn't have any problem with this. So I would like to offer that as so I'll read it again for Chairman Carson. The election under this subsection shall have no impact on the accounting or tax treatment of distributions for an electing pass-through entity. And what we're doing here is clarifying the fact that, as you know, a C corporation, the distributions come in the form of dividends, which have to be taxed at the personal level. There was concern in parts of the CPA community that if they're going to be allowed to have their S corporations pay the state income taxes in their corporation, they were afraid that basically gives them an advantage that C corporations enjoy there. They just wanted to have clarity that, in fact, when they did their distributions, they wouldn't say, well, we treated you like a C corp, allows you to pay your taxes. We're going to treat you like a C corp, and we're going to tax your distributions of income. So this is just a clarifying sentence to make it very clear that that is not what the state of Georgia intends to do to the distributions out of a pass-through entity.
I understand.
So I would.
When do you pay the corporation pays the taxes?
your S corp or LLC pays the state income taxes. Well, they pay the state income taxes, which acts as a deduction against your otherwise due and payable federal taxes. So you save money on the federal portion. This sentence just clarifies that we're not messing with how the distribution of profits is going to be taxed.
Okay, members of the committee, we hear the suggested amendment. Is there a motion to accept the amendment? Is there a second? Any discussion on the amendment? Hearing none, if you favor this amendment, please say aye. Aye. If you oppose it, say no. And it passes. Now we have a motion already to accept a motion for a do pass recommendation and a second. Is any other discussion on that?
As a substitute.
As a committee substitute.
As a committee substitute, yes. Any other discussion?
Move do pass. Oh, we've already got a motion, sorry.
Any other discussion? If you favor the motion to pass the bill out of committee as amended, please say aye. Aye. If you oppose it, say no. And it passes.
Okay, all right. So the income tax subcommittee stands adjourned. What's the next committee?
Okay, we're going to go ahead and call to order the Ad Valorem Subcommittee of Ways and Means. We're looking at House Bill 290. I believe this is the second hearing. Is it correct? Okay. Representative Scoggins.
Okay, thank you, Mr. Chairman and committee members. This is House Bill 290. I bring that on behalf of the of GATO, which is the Georgia Association of Tax Officials. This is the same bill that we passed out last year. Leader F. Strachan was carrying the bill, I think, last year. It was House Bill 1280, I believe. It passed 167 to 3, I think, was the vote. This is a bill that allows the tax commissioner to contract with a municipality to collect taxes for that municipal county township in their county. It's a three-way contract. It requires a contract with the municipality, the tax commissioner, and the county governing authority, which would be the commissioner's office in that particular county. And it's basically the same bill that we passed out last year. And as I mentioned, it does have the backing of the Georgia Association of Tax Officials. And
all right, very good. We do have one speaker, Mr. Handel from ACCG. If you could make it very quick, sir.
I just wanted to express our support for the bill.
That sounds even better. Even better. Any questions for the representative?
Thank you
very much. I heard a motion. Did I hear a motion to pass?
Yes.
And a second. Any further discussion? All in favor, say aye. Aye. Any opposed? Bill passes.
Thank you.
Go on to full committee. Representative Knight, you want to sit there? Why don't you do that? There you go.
Thank you, Mr. Chairman, members of the committee. I bring before you House Bill 449. It is a very simple bill. A couple of years ago, we had made a special exception in the CUVA code in regards to solar installations. And what has happened is become very apparent that we now don't have parity or the integrity of the covenant by these folks who are signing up and for the conservation use valuation. As a way of an example, right now, if you have two landowners, both up under have signed into the CUVA covenant, one having maybe a potential to or an offer for these solar installations, under this exception, they can take that portion of the acreage out of CUVA, pay only the penalty on that portion that is taken out, but they don't, and under this exception, they don't break the rest of the covenant, okay? Whereas if there's an identical landowner next door and that landowner decides to sell the same amount of acreage, say, half of their acreage, and it's to a developer, a subdivision, commercial development, any breach or taking land out of that covenant actually breaks the entire covenant. Okay, so you have a parity issue, and basically we'd given special treatment to one. All this is doing is simply undoing that special treatment that this body or this committee and this body actually put in there. I think it was 16, 17. I'm not sure if council's here. Some of my other members may remember that year. And all it's doing is taking that portion out such that everybody's treated equal up under the covenant. And if you enter into the covenant and you break the covenant for whatever reason, okay, you're treated equally. And that's what the bill does.
Okay, thank you, Chairman Knight. Any questions for Representative Williamson?
Just real quick, Chairman Knight, this does, you still have the carve-outs for cell towers, wedding venues, and there's...
Yeah.
We
did,
this has been a number of years ago.
We have done that, but, well, but what we had done over the years as far as the exceptions, we had done things, and I would argue this body and members on it had looked at things that were de minimis. In other words, that didn't change the underlying use of the land. In other words, if somebody had a wedding in a barn, it didn't change the fact that it was on a farm or a rural piece of land, timberland. We would allow, the exception. And you are correct, Chairman. We did allow for cell towers, but we did put in, I think it was a 6-acre maximum limit. So again, we were looking at saying, hey, an exception, but it did not, in a way, change the overriding conservation use of the entire property. And again, conservation was, it was ag, or mainly these three categories: ag, timberland, wetlands, if you will, okay, and wildlife, leaving things natural. So those are the underlying issues, and while there are exceptions, I think this body made a decision they were de minimis, and these exceptions wouldn't change the overall use or covenant, the underlying purpose of what we were trying to do with this conservation with CUVA. But as it turns out, the special exception we have here, I think, has undermined the original purpose of CUVA.
Thank you, Mr. Chairman. Any additional questions from the committee? Any other questions from members of the public? I know this was a late add to the agenda, so we didn't have any sign-ups. Anybody wanted to speak in regard to House Bill 449?
Oh, yes, sir.
Go ahead.
Thank you, Mr. Chairman, members of the committee. My name is Mark Woodall. I'm the legislative chair of the Sierra Club and also one of 400,000 tree farmers in Georgia. So I oppose this bill for both those reasons. This bill would hurt a lot of folks. The overwhelming public interest was to get solar energy going in Georgia. Solar is the best thing since sliced bread. And what this bill would do, it would hurt tree farmers because, say, I've got a tract 225 acres across from a 15-acre tract that's in solar. So if I wanted to do the same thing, and I'm in a 15-year FLIPA, I'm close to the end of that 15-year FLIPA, my penalty would be thousands and thousands, tens of thousands of dollars. So this would hurt tree farmers. This would hurt all the farmers. It would hurt the rural counties of Georgia. Y'all may have heard some of the rural county folks talking about how great this utility scale solar is for them because it's so much money that's added to the property tax base. There's no demand for services. So this would hurt the rural counties. This would hurt the ratepayers of Georgia, the co-ops and Georgia Power, because all this utility scale solar we got coming to Georgia, 5,000 megawatts soon, puts downward pressure on the rates. So this would tend to hurt the ratepayers. It would hurt Georgia's pro-business reputation. As y'all may know, we have the largest solar panel manufacturer in North America in Dalton, Q-Cells, and they just announced a $2.5 billion expansion in Bartow County. So, I mean, they'd have to ship their panels to Florida or Texas or someplace if we don't incentivize solar. So, anyway, there was a reason for adding this provision, and it would have been a complete 100% exemption if it hadn't been for the Senate. That's who cut it back to the you have to pay instead of getting completely off and not paying anything. The Senate insisted on that partial penalty. So it should have been better for the tree farmers and the farmers. So I would just ask that y'all really think about what you're doing here. This is
all right. Thank you, Mr. Woodall. Representative Chairman Knight.
So I'm hearing you say that CUVA's purpose was to incentivize solar?
I think CUVA and FLIPA were to preserve open areas of Georgia, and it was also decided that we would do certain things that were special purpose, like cell towers and wedding events.
No, sir, that was not it. The CUVA, and if you read the code, the conservation use goes back to for the purpose of timber, ag land, wetlands, and also just in some areas just general wildlife, letting things go back to a natural state. So the original intent of CUVA was to make sure that people who owned that property were not had an opportunity to have it a valuation, a CUVA valuation that was significantly less, so that we could make sure that Georgia and its conservation uses, those uses we just talked about, would remain on our landscape. That was the purpose of CUVA. So if Sierra Club is coming in and saying that the purpose of CUVA is to incentivize solar panels in Georgia's most rural and undeveloped areas at the expense of the timber industry, at the expense of ag or wetlands, I find that to be a contradictory statement to what I would normally have thought that the Sierra Club would have been advocating for.
Well, Mr. Chairman, you know, we're not always consistent around here, but I would say to you that all those exemptions were made in the public interest. We got over 20 million acres of timberland, more than any other state. We've got some land that, you know, all the dirt ran off during the cotton farming days. So we got some land that won't hardly grow a pine tree. So, and the thing is, after the 20 or 25 years, however long the solar panel's in there, it's going to go back to timberland. I mean, those panels will be taken off and recycled or whatever. And also, as this has come along, we've got people like raising goats and various things in the solar panel areas. That's a big thing they've done down in southwest Georgia.
Well, thank you, Mr. Woodall.
I just read about it. I haven't been down there to check it out. But I need to go down there to White Oak Pastures and see.
I think you made a statement, if I may, Mr. Woodall, that land that can barely hold pine trees. Well, I can think of 2,000 acres down where my family's from in Taylor County. They hold quite a bit of pine trees. Any other questions for Chairman Knight in regard to this? This is a first hearing. No further questions. We're going to adjourn the ad valorem. Sorry you missed it, Mr. Chairman. With all that, go ahead, Penny. Push your button. Push your button, Penny.
It's just appalling to me the amount of land that's being cleared now and taken over with solar panels when we need farming and food. I don't know. We can't take the world over with solar panels.
Appreciate that, Penny.
I like if you'd been to rural council the other day, the people had a great idea about solar panels, putting them over of landfills.
I understand.
It's great.
Did you have something? With that, this is a first hearing. We are adjourned. Thank you very much.